people are saying and I use the S&P, right? The S&P 500 for the last decade has grown at 15% a year. And people are like, yay, I made money. And I'm like, yeah, but the money supply is growing at like 15% a year, right? Gotcha. So meaning like you just broke even on purchasing power, right?
Let's go. Welcome to House Rich, the real estate show. We talk to average people that do above average things in real estate. Today we have the investment episode. We're going to talk to Phillip Washington, the Chief Investment Officer at Stonehill Wealth Management. So it's going to be a cool episode because I always tell you guys, real estate, but you need to, in my opinion, you need to kind of diversify what you're doing. You never want to have all your eggs in one basket. So we're talking investing, crypto, everything in between, maybe get into building your brand on LinkedIn as well. We had a little chat before the episode started. So the sponsor for today's episode is House Rich, the official brand of home ownership. Use promo code POD for a discount at checkout. So Phillip, our guest, appreciate you hopping on the podcast with me. This is one of the first guys I actually knew that had a podcast. But can you introduce yourself to the good folks?
Yeah, I'm Phillip Washington. We Grand Prairie native. Born and raised Houston, Texas. Chief Investment Officer of my company, Stonehill Wealth Management, and host of the Wealth Building Made Simple podcast on all major platforms.
Okay, cool. Appreciate you joining us. So want to talk a few things, just kind of basic investment advice. And first, we'll kind of get a little bit deeper into it as the conversation flows. But let's say I'm a 25-year-old. Maybe I graduated college, maybe I didn't go to college, but I'm semi-comfortable in my job to the point where I can save maybe a couple $100 a month or a couple $100 a week. Like, where would you recommend someone like starts investing if they never invested a penny anywhere, whether it's real estate, the stock market? What would you invest somebody start with?
Yeah, so that's a good question, and that's become a harder question to answer. But I'm gonna give an answer, right? I think I'll build a checklist, right? So 25-year-old hadn't got started investing. I would probably split the $200 a month and then do half into your savings account, because I'm gonna assume maybe they don't have any money in savings, and you're gonna need to build some sort of cash reserves for things that you may not know you need in the future. And I'm talking, this is aside from an emergency fund, because you may down the road want to invest in real estate. You're probably for sure should want to buy a home down the road. You got marriage, kids, all that kind of stuff. And then the other 100, I would open like a simple, like I call it a brokerage account or individual account.
Okay.
And that's like, think of it like a savings account, but it's liquid and available, but you can invest in mutual funds, stocks, and bonds. And then what I like for starter investors is to go buy like a target date retirement fund. So Vanguard has one, BlackRock has one. Use a low cost index fund company. So those are two of my favorite: BlackRock, Vanguard.
Okay.
Two that I use for clients. And you would pick the target date retirement fund because it'll have a number at the end of it. So you'll pick the fund that corresponds to when you'll be 65. So if they're 25 years old, that'll be 40 years from now. So that'll be a target date 2060 fund.
All right.
And that's just a well-diversified, portfolio where you're globally diversified and you don't got to think about it because they pick the funds for you. And that's a good way to get started. Then you can go start reading your books and do everything while you're studying. You're building your savings. You have a professionally managed low-cost portfolio. By the way, that portfolio probably beat most other professional manager portfolios over time that are not invested in crypto. That's a whole other conversation.
All right.
But yeah, that'll be a good start.
And so can you talk a little bit more about that targeted date fund? Because basically the risk shifts as you get old, or the risk shifts, it becomes less riskier, I guess. Can you talk about how the target date fund works?
So so that's important. And it's funny because right now we're in a very volatile period of time for the market. And so, when you're in your 20s, you're not really worried about that because you don't have that much money, right? But as you get older, when you're 50, 60, I have clients with $500,000, $1 million, $3 million, right? And they, in the market being down, 15% for somebody with $1 million is 150 grand, right? 15%, that's not that bad, but the psychology of $150,000, that's emotionally difficult, right? And so what the target date fund does is, as you get older and you get closer to your retirement date, and you have less tolerance for up and down movement, more money, more that you can potentially lose, you tend to want to be more conservative, right? So right now, my clients who are closer to retirement, we're relatively conservative in our strategies, but the young folks that are far away, they're riding it out aggressively.
Mm-hmm.
Not everybody's the same though, but in general, that's what the fund does for you.
Okay, thank you. And I want to go through some alphabet stuff or keywords, I want to call it, just so, because I think a lot of times folks hear terms, they have no idea what they are.
Yes,
So just
sir.
going to go through some terms. You could explain those to the good folks. So what's a ETF?
An ETF is an exchange traded fund. So let me explain what that means. So in the mutual fund world, you have actively managed mutual funds, which are higher in cost. So it means you hire a manager, you say, hey, I want to pick this manager over here because I think they can pick stocks better than just just buying an index. So everybody understands the S&P 500, right? So everybody hears it on the news, they see it. It's the 500 largest stocks in the US. It's like an index that tracks it. You can, if you're investing, you can choose to find a manager who will pick the stocks out of the 500 that will beat the index, or you can just buy the index. Now, most buy a fund that mirrors the index, which is lower cost. Now, most fund managers don't beat the index, and there's like thousands of them. And so your odds of picking a manager that will beat the index is, I would say, probably similar to drafting a LeBron James,
Okay.
or a Steph Curry. So it's very difficult. It's not impossible, right? But difficult. So people tend to say, all right, if I'm going to build a portfolio, I'm going to focus on like asset class, which I may have to explain, but I want to make sure that, okay, if I want to invest in US stocks, let me go with the lower cost option because the odds are on my side to beat the professional manager, and it's lower cost. So I hope that explained it. Oh, and so the ETF is just an index fund that trades like a stock. Because to go deeper, and some folks that have probably read Tony Robbins books or whatever, they might need this explanation. You can buy an actual index fund, but you can only buy and sell that fund once at the end of the day.
Okay.
So if you want to be able to trade throughout the day, so if you want to be able to sell at noon or buy or sell in the morning, which I'm not recommending you day trade, but if you want to do that, you need an exchange traded fund, which is just the index that trades on an exchange like a stock.
Oh, okay, thank you. And then you kind of touched on it, or you spoke about it, but what exactly is a mutual fund?
Another great question. It's basically a basket of stocks. So let's say the person with $200 a month that wanted to invest, at $200 a month, I mean, if you want a diversified portfolio, that's very difficult. Before we had fractional shares, now we have fractional shares, so it's more easier. But before, if you wanted some Apple stock or Amazon stock or Google stock, I mean, Amazon stock alone you can't afford, right? So at $200 a month, you can only afford like a few shares of some smaller company. So you couldn't really get a diversified basket. So a mutual fund says, hey, we're, our mutual fund sells for $25 a share, but you're buying a package of 500 stocks, 5,000 stocks, 1,000 stocks, right? Whatever it might be.
Okay, thank you. And you dive into what an index fund is?
Yeah. So an index fund is just it is just, actually I didn't explain that deeply, but an index fund is a simpler way to explain it would be if you say, hey, the average home in this neighborhood is, $400,000 for this price in this area. And if you could just invest in an area instead of investing in individual homes in the area, and then participate in the growth of the area, right? You reduce your risk of trying to pick the homes in that area that might do better than the area on average, right? So if you buy an index fund, you're just saying, hey, I want to buy in this neighborhood in Frisco, and I want to, but give me an index that just tracks the average home price in that neighborhood. 'Cause I don't want to try to pick which individual homes in the area will grow faster than the average. Just give me the average.
Oh, okay. Thank you. And then can you explain IRA?
Yeah, that's a good one. So an IRA is a retirement account, and technically it's a trust that is set up for you, where the money can only be used for retirement. So the IRS says, hey, this trust, you don't actually own it, such and such. It's a trust set up for you as the beneficiary of the trust. But in this trust, we're going to give you special tax treatment.
Okay.
Right? And so for a traditional IRA, the tax treatment is the money you put in there, you get to write that off on your taxes as you grow. And even if you sell stuff that makes money and you have a gain, you don't pay tax on the gain. But when you take money out at retirement, you got to pay taxes on everything, 100% ordinary income tax on the money that comes out. And the restriction is you can't take money out before 59 and a half without penalty. And there's only so much you can put into it every single year. The other IRA is a Roth IRA. So that's a regular IRA, which is traditional. Roth IRA. So same rules on limiting how much money you can put into it. Same rules on not accessing it before 59 and a half. With some they do have some exclusions on that. But the difference is you don't get a tax write-off on the money you put into it. So if you put in money, you don't get the write-off on your taxes. But the trade-off is when you take money out, you take out your gain and the money you put in tax-free in retirement.
Oh, okay, thank you. And I should have asked this question first, but probably the most basic question, like what is a stock? Just
yeah. So a stock is just ownership in a business. So if you're like, hey man, I buy a lot of iPhones and Apple makes a lot of money, and I think they're gonna keep making a lot of money. I want to have ownership in the company. You can go buy a share of Apple stock, right? Or Peloton stock, so it's ownership in a company.
okay. All right. Thank you. So hopefully that answers some of the questions, some of the terms that you probably hear out there. You may be scared to ask, but I guess you could DM Phillip or DM me if you got any more questions about some of these alphabet things you hear out there on the street. So I think a lot of folks got introduced to the stock market. I don't know if in a good way, but in 2020 where things were going wild, AMC was at GameStop, everything was kind of going wild. Can you kind of talk about just how the stock market normally works? I think a lot of folks got into the stock market maybe or got into investing during that wild 2020 2021 time frame. But can you talk about normal kind of returns you probably should expect to see in the stock market versus kind of what we saw the last maybe year and a half?
Yeah, so that's an interesting question because we're no longer in normal times. So
All right.
and if you want, I'm gonna do a short version of this, but if you want a detailed version, go to Wealth Building Made Simple. Go to my YouTube page though, because on my YouTube page I have my I got like 5 videos where I kind of cover these in details, or short videos.
Okay.
Because my regular podcast on Apple Podcasts, Audible, all that kind of stuff is all my other guests too, and it'll be tougher to find mine. But specifically, stock market moves on 3 things, right? Growth, right? So the economy and or the company, because the company grows based on the economy. Then you have money supply, right? And so money supply is how much money's in the system, right? Meaning the central bankers who control interest rates, they have a big impact on the amount of money in the system. They're not the only impact, but they have a big impact in the short term on how much money is in the system.
What do you mean by the system?
So for example, think of think of money like blood, right?
All right.
If there's a restriction in the flow of our blood, right, meaning our blood supply goes down, something bad happens to the body.
Yes.
You know what I mean? And so sometimes, as in right now, you will have, you had 2020 happen, and I did podcast episodes on this, and it's funny that the central bankers are surprised at the inflation, but I literally said it, which is why we put so much into Bitcoin. But when they dump these stimulus checks into the system with PPP loans and then giving people checks, I was like, the global economy is growing way too slow for that to support the money. So the river got real, or the blood, there was like way too much blood in the system, right?
Gotcha.
And that jacked it up to where it sent prices of everything going up, right? Lumber prices went up, oil and gas is still going up, home prices, went up, because what was happening is when you put too much money in the system, what's actually happening is those prices are not actually going up. It is the value of the money is going down relative to those things, right? Because
Gotcha.
there's only a limited supply of homes, only a limited supply of lumber. And so if you put more money in the system, more folks are bidding on those prices, right? And so it goes up, but they just don't want to keep the cash because it's not paying much. So it's really the store value is going down. So that's money supply causing prices to go up, which is why they skyrocketed. Like stock prices went up crazy. You had GameStop, you had people doing just ridiculous stuff with money. And so the central bank said, people are getting ridiculous with money. We need to slow this party down. So we need to restrict the blood flow, and so they said they have control on like short-term interest rates. So the rates that we earn on savings accounts, right? The reason why we haven't earned much money on savings account is they basically had short-term rates at zero, like since 08. And so they said we're going to raise rates 8 times over the next 2 years. And so what that told the market was the money supply is going to shrink. And so what that tells you as an investor is if they do that, that's not good for the body, right? Remember, money, blood, that's not good for the body. So asset prices, went down. So money supply is a huge factor, especially when growth is slow, because America's not been growing since like 2000 aggressively. China slowed down 6-7 years ago, and they have a lot of debt. Europe's been slowed down a long time ago. Japan slowed down in the 90s. There's literally no growth in the real world. And so
when we say growth, what do you mean by growth?
I mean, like economic growth. I mean, like, yeah, I mean, like economic growth is productivity, us getting smarter. And as we get smarter, we do things more efficiently, and then we use those savings, because when you do things more efficiently, it costs you less to produce a certain widget, and then you use those savings to invest in more production, to do it more effective, to drug costs more. Kind of and so this is the nerd stuff, but we borrowed so much money over the last 40 or 50 years. We basically, there's no more productivity gains. Like we fast forward productivity gains that, because productivity, like for humans, is like 2% a year, like going back hundreds of years. So that's kind of a set number. When you borrow money, you can borrow those productivity gains in advance, but then you're gonna have a long period of time where you know what I'm saying, like where growth is slow because you can't borrow any more money. It's like if you underwrote somebody that had an underwriting, meaning if you were going to go buy a house and you were to go talk to a mortgage person, and your debt to income ratio was 80%, meaning if you made $10,000 a month and 8,000 of it was like loan payments, they're going to be like, get out of here. We're not giving you more money. Like you're too. So that's the system right now. So the system is probably more equivalent to, the debt to income ratio is like ridiculous. It's not a 1-to-1, but it's like pretty close to like spending all, their debt to income ratio is high for countries around the world. So growth is slow, super slow. So you have this volatility because the money supply is driving all swings.
Okay.
Yeah, I know that was super nerd, but you know, you had me go down that path.
No, it was cool. Okay, so we're not in usual time. So you basically can't look back at what happened 5 years ago, 10 years ago. We just gotta just
Yeah, because returns moving forward are going to be depending on how much money they put in the system, but
gotcha.
they're not going to be real, right? And this is, I'm glad you asked. This is an important part because people are saying that, and I use the S&P, right? The S&P 500 for the last decade has grown at 15% a year,
Uh-huh.
and people are like, "Yay, I made money," and I'm like, "Yeah, but the money supply is growing at like 15% a year." Right? So
Gotcha.
meaning like you just broke even on purchasing power, right? The S&P 500 just helped you maintain your purchase. People like, what's
Gotcha.
purchasing power? Purchasing power is if you're a teacher and inflation went up 7% like it did over the last 12 months, and they gave you a 4% raise. You're like, which like true story, you know,
Yeah,
true
yeah,
story, right? You're like, hey, I didn't even make any money.
yeah.
You know, my cost of living went up more than my salary.
Uh-huh.
You know, so if the cost of living goes up at 7%, because that's what money supply does, it pushes up the cost of living. Um, if your money isn't earned at least the money supply rate, then you didn't really make any money. Like in dollar terms, you did, but you go look at
Yeah.
Venezuela, you know, where loaves of bread cost, you know, millions of bolivar because the money is worthless. And so that's where we are. So we may have a sustained period of quote unquote high nominal returns, but you want to compare that to like the money supply. And if you want to know
Okay.
what, and if you want to know what that is without being a nerd, just look at the S&P 500 returns. Like that's going to give you a really good indicator of what the money supply is, because they don't know what the money supply is, because money's become everything. Money's become
Uh-huh.
NFTs. It's
Yeah.
become, you know what I'm saying? Because like they're just, it's and by the way, they're not going to stop printing, right? And that's a whole, like this is the, you gotta go watch my YouTube channel. That's why I was like, go there, because I'm gonna, you know, it's it's a deeper thing that's happening. When money dies, you have this happen, right? So our money is dying, right? We're at the end of that cycle, and it dies every 50 to 100 years. It doesn't mean it's
Okay.
the end of the world. It just means this financial system is getting recreated.
Okay, cool. And yeah, I'll make sure I have a link in the bio, whether you're on the podcast or
Yeah.
YouTube, to his YouTube channel as well. So okay, so when is money so, so 50 to 100 years, I guess money is on schedule to die in the next next couple years or next.
Yeah. It's already dying.
All right.
It's because death is when, you know, when money, when we're right here, right? When interest rates were zero, when they literally haven't stopped printing, you know, printing money since '08, which nobody knows. Like, and you can look at every single, like, look at again, Venezuela, Zimbabwe, um, uh, the pound, which is the British money, which is still alive, you know, but so the pound didn't go away, but it's no longer the reserve currency, right? So the US dollar after World War II became the new reserve currency, and the British pound kind of died as the world reserve currency. So it doesn't mean the dollar's going to like go away, but what it
Okay.
means is British citizens lost purchasing power relative to Americans, right, over the last 100 years, as our currency became the currency that the world traded in, and that makes the people of the country poorer if they're not saving in the currency that is the more superior currency, right? And so
Gotcha.
that's why right now, you know, a lot of my wealthy clients they're buying real estate, they're buying gold, they're buying Bitcoin, they're buying companies that are growing at a faster rate than the money supply. So that's why you have the Netflix, Facebooks, Amazons, Shopify's, you know, Teslas that are skyrocketing, because in a world where rates are low, and growth is slow and money supply is high, you got to figure out, all right, if they're going to print at 15% a year, what companies are growing at a faster rate than that? I want to own that. And I also want to own scarce resources like real estate,
Gotcha.
gold, Bitcoin.
Okay. Okay. Thank you. So there you guys go. So make sure, well, do what you want to do, but your money under the mattress or in the savings account is not you're literally hustling backwards if that's your way to save money.
Facts, facts,
So
facts.
where do you get your information from? Like, what do you read? Maybe you know, books and like on a daily basis. Like, where do you get your information from?
Man, I've read hundreds of books. I'm always reading something, but I mean, you know, my books these days are nerd books. So like one of the books that I think will give people two good books is that are giving information on this is Navigating Principles for Navigating Debt Crises by Ray Dalio.
Okay.
Right, it's a big 800-page nerd book.
All right.
He also wrote one that was called Principles for Navigating a Debt Crisis. When you look at Ray Dalio, he's going to have 3 books, right? One of them is on life and work, 2 of them are on debt crisis, and the first one I mentioned. So those 2 are both thick books, full of, really for nerds. Those are good books. Outside of that, for this topic, I would go to YouTube. It's a 30-minute video. It's a cartoon. If you ever took economics in college, you wasted your money, like me. You can watch this video in 30 minutes and know more about economics than most everybody out there. Is how the economic machine works on YouTube. Great video. I'm always listening to podcasts. So some of my favorite Bitcoin podcasts are What Bitcoin Did. CoinDesk is a coin podcast company that has some good podcast episodes. Bitcoin Audible is another good one. I mean, I'll read and consume so much information. Kathy Woods, Big Ideas. Right. If you Google Kathy Woods 2022 Big Ideas, it'll give you a 60-page thing that she put out this year, which is what's going on. And I'll read something and I'll go down a rabbit hole, right? And then I'll just find a bunch of random stuff. But I put in hours and hours of reading a week, right? A few hours a day, just to know what's going on.
Okay. And so I think I know what you're going to say this, but I want you to frame his next answer. I'm pretty sure I know his answer is going to be, and based on what he said about how much he reads and how much he reads on a daily basis, long-term, all the nerd books and all that. So what are your thoughts on day trading? Like folks day trading, making these big profits. You'll see folks post screenshots, made 10K today, 3K in 5 minutes. Like, what are your thoughts on day trading in general?
Yep. So I like to keep it real simple, man. I like to, if I ever want to know knowledge of something that appears to be a trend that doesn't make sense to me, I like to go as far back as possible. So I want to go back and say, man, has any time in history has anybody made quick money? Has anybody built wealth with quick money ever in history and kept it? I was like, nah, I haven't seen it in history. I was like, well, maybe today's billionaires are smarter. So I'll go down the Forbes 400 list and I'd be like, man, which one of these dudes are a billionaire from day trading? I can't find one damn billionaire from day trading. I see all these guys that are making millions from selling courses on how to do it. You know what I'm saying? But I'm like, damn, like if they get those kind of returns that good, I manage money for a living. It shouldn't be hard for them to go raise 10 million. Like, you know what I'm saying? I mean, if they're that good, I can vet them. I'll give them a big chunk of my clients' money and then tell all my advisor buddies who manage $100 million, and then we want to make our clients money. Yeah. You know what I'm saying? Like, I want to, please let me invest with you if you're that good. Like, I'm not saying you can't at all, but what I'm saying is I think it would be foolish to build an NBA team with your sole objective of drafting LeBron James. You know what I mean? I'd rather be Greg Popovich. Yeah. You know what I'm saying? And so that's how I feel about day trading. I mean, is it possible? Yeah. Is it probable? Probably not. And you can get a whole lot wealthier by and I'm not saying you got to be boring and just buy index funds. I'm saying, I got a client who he's our age, you know what I'm saying? He's a tech executive, saves a bunch of money, but and he's like, Phillip, I want to invest the way you invest. And I'm like, man, I'm very concentrated. Yeah, I'm very concentrated. I'm diversified, but I only have my best ideas. I don't have any ideas in my portfolio that I have in there just to, for diversification. Like if I don't think the asset class is going to beat the money printer rate, it ain't in my portfolio. I might have some cash to balance the volatility, but I'm just saying like my volatile ideas. And so, but he's like me, he has a 5-year plus time frame. He doesn't mind volatility. This stuff going on right now when when we're down, he's like, hold or hodl, you know what I'm saying? Like he in it, you know what I mean? Because he understands his mentors who are billionaires, by the way, that he taught. You know what I'm saying? Because we talk to people who got money,
Yeah.
you know what I'm saying, and who not from selling courses, you know what I'm saying, that built real wealth. And I'm not knocking them course people, man, because they're smart business people. I think they really believe what they're selling, but he knows what I know, that wealth is built through volatility. You know what I'm saying? Like if you if you own a business and you're successful, of course you're going to make more money than the person that works for a similar business that's successful, because they embrace more volatility. You know, so same thing applies in investing. You know, I know every time I do my rant, I piss off somebody who is day trading because they think I don't know what I'm talking about, and that's cool. You know, I'm just giving my truth.
Okay. And like I said, I knew what he's going to say to that. I've never asked him that question. I knew he was going to say, but I wanted to ask him that right after he talked about how much like research and reading he does. So I'll just say that if he's reading 2 hours a day, reading all these books, if you're not doing that, you probably have no chance at all. And even if you are doing that, you probably have no chance at all. So yeah, I've seen a stat where like, I think like 90% of people lose money. So yeah, those screenshots, they look cool, but that'll show you the L. So let's say I'm we talked about a 25-year-old. Let's say I'm a little bit, I guess the age really doesn't matter. Well, I guess let's say I'm 30 years old, and you know, I've been scared to invest, but I got like 20K just in my savings account. Just kind of sitting there. You know, I'm stable. I own my own home. Like I don't need to have no big purchases coming up. Like I have an emergency fund set up. Like what would you say? Hey, what would you do with this 20K just kind of sitting around and losing value?
Yeah, and that's a bit harder. And that, you know, is more where you would probably want to get advice from an old, you know, for an uncle, or maybe somebody who you know who's a good investor, right? And I'm purposely not saying a financial advisor, right? Because a wealth manager like myself, like we're gonna have a minimums, and maybe we probably are not gonna manage. We're not gonna invest 20 grand. Unless you're a friend, you know what I'm saying? And then if you go to like somebody who sells a product, which I wouldn't recommend, because you have the advisors that will take 20 grand, but if they're not a fiduciary, they're going to sell you some you know, some crap. So it's hard if you have 20 grand to get like legit advice. You're going to want to find a wealth manager. Like I give my friends a lot of advice who I don't want to maybe not manage money for. They don't like if they're my close friend, I'll do it. But if they're like an acquaintance that I like, you know, I'll just say, hey, do this with your money. You know, give me 15 minutes of what you're trying to do. All right, put your money here, and I'll let them do it. So if you got somebody like that who you can talk to, you know, give them your plan, right? I want to buy a house. I want to, you know, start a business. I want to, whatever the goal is, and they'll be like, all right, cool. You know, I would do that. So I recommend you do that with 20 grand, because 20 grand is a respectable amount of money to have saved, you know, but you're going to need probably a little bit more to get that to a wealth manager for them to manage it and give you advice on that in the context of your whole picture. And I know that was a cop-out answer, but at 20 grand, it just depends, right? Because
gotcha.
You've obviously worked hard to save that money, and you want to make sure you put it to work the right way. Because the worst thing you can do is put 20 grand into some investment, you know, and then need it for a real estate down payment on a home, right? Or need it for a flip, you know what I'm saying? Or whatever you might want to do.
Okay, got it. Thank you. And so you mentioned it a little bit ago, but what is a fiduciary? You talked about that.
Yep. So a fiduciary is somebody who, you know, like, so you know, they charge either like a fee for service, right? So they don't get paid a commission or a kickback for any funds that like I don't get commission for funds I use. The funds I use are because I vetted them, and I think that they're good. Or stocks that I buy because I vetted them and I think they're good. It wasn't, you know, I don't get a kickback from any of it. And I'm a fiduciary in the eyes of regulators because I have a specific license or a designation. For me, it's both, which requires me to keep my clients' interest ahead of mine at all times, right? Which is different if you're dealing with somebody who sells a product. They sell you a mutual fund or some annuity or something like that. They only have to make sure that what they sell you at the time is suitable. And suitable is one of them words that just doesn't
Yeah.
mean anything. Like it's just, you know, did I explain it to you? Did I document I explained it to you? Do you understand it? And who really understands what they're buying anyway? You know what I mean?
Yeah,
Like, yeah, they're just, just okay. I understand it. So that's
so the opposite of a fiduciary is it a non-fiduciary, or what is the opposite? Is
yeah,
there
just there is no
okay?
opposite. Either they're a fiduciary,
Or
either
they're not?
or they're like a license to sell mutual funds or stocks or insurance, a
Okay, so
salesperson.
and I'm not asking you to call anyone specifically out, but more specific, the better. Maybe it's maybe companies, but are there any what? How can I say this? How do I know if I'm dealing with a non-fiduciary? Or are they certain like companies? Are they certain like
Yeah,
insurance? Or like how do I
yeah.
know?
Here's the easy thing to do. You ask your person. You say, for all of my investments, how am I paying you? Am I paying you a commission or am I paying you a fee? And am I paying you both? Because what'll happen is, most advisors at the big wirehouses that are not independent, a lot of them will be both. So they can say, oh yeah, I'm a fiduciary, but then they sell you a big part of your portfolio that's a product, right? Because people don't understand, they don't know. So you ask them and get it in writing. Say, hey, so email it to them, email a question. Hey, would you mind emailing me back? But don't call me. I just emailing me back. How are you getting paid? Are you getting paid a commission, a fee, or both? Right. And if they're getting paid a commission, they're gonna call you. They're not gonna email you back. They know you've been talking to somebody. And then you just politely reject the call. Be like, hey, text, hey, you mind emailing back the answer? It's not a good time. And I just want to have it, documented. My CPA told me to ask you or something like that. Just put it off on your CPA.
That's a good okay, cool. That's good tip there. Thank you. And I don't know if you can speak on this, but I hear about this a lot. Some people say it's bad, some people say it's good, some people say it depends. Do you have any thoughts on like whole term like life insurance?
Yeah, so here's the cool part. I mean, I'm in love with my life insurance agent, and because I don't sell life insurance, and with the right type of life insurance. So, I think outside of like being on track with your goals, having plenty of liquid money, having a high income, most people early on should own a lot of term, right? Because you need a lot. If you die, you got to replace your income, and that requires a lot of insurance. But I'm a huge advocate of owning permanent cash value life insurance, specifically, whole life insurance for clients that are ready for that part of their plan for a couple of different reasons. Because especially if you're a client of mine, you're rich or you're going to be rich, right? And so that means down the road, you're going to need to do estate planning. And so that means having death benefit that never goes away is going to be great for like wealth transfer, for paying estate taxes, all kinds of fancy wealthy people problems that you're going to have down the road. And the earlier you buy the whole life policy, it's like buying a home, right? If you buy a home today, you're going to lock in that price, you're going to pay off that mortgage, and you own a home. That's the same with whole life. But you also get to accumulate cash that could be used for collateral for business loans, collateral for real estate loans, right? You can use it if you, I don't particularly like the idea of using it for retirement income, because because when you're buying it, you're going to be buying it if you're going to be rich or you're already rich. So the death benefit will be more important than the cash value. But that cash growth in the policy as collateral is amazing, and there's no volatility, right? So for somebody like me, and my clients are similar, 40, 50, high income, high net worth professionals, right? Their entire balance sheet is volatile because they either own a business, they're in real estate, their portfolio is aggressive, everything's volatile. And they're like, I just want a good place to park some cash. I can't put the cash in the bank because they don't pay much. But if I can put what I would normally put cash in the bank inside of a life insurance policy where I earn a decent interest rate and I get to grow that money tax deferred and I get to access it tax free if I need it and use it as collateral, and my death benefit is tax free. I mean, that's an amazing combination. I mean, people would be shocked at how many wealthy people own cash value whole life insurance. It just needs to be sold properly. A lot of times it's sold to a 25-year-old teacher who's single with no kids and they sell them a couple $100 a month of whole life. I'm like, that's not appropriate. Like you just wanted a fat commission on that.
Gotcha.
So yeah.
Okay, because I was going to ask, why do people talk bad about it? Because people are pushing it to the wrong people, basically. That's when.
Yeah.
Okay.
It's the same thing people do to like mortgage people. They're like, oh, mortgage people, cause the crash. No, some mortgage people cause it. What I'm saying? Some people sold people too much mortgage for their home, but not. I mean, that doesn't make a mortgage professional bad. That's just inappropriate selling by some people.
Okay. Thank you. So now I want to jump into the crypto space. So I know you're a big proponent of Bitcoin. This is a very broad question, or maybe it's not. What is Bitcoin cryptocurrency like? What is it?
Yeah, at a simple level, man, is money. It's so a short simple history lesson is, before the printing press, the church was the gatekeeper of knowledge. So if you wanted to read or understand ancient wisdom and knowledge, you would first have to be approved for them to teach you how to read. I believe it was what was it? Latin or Hebrew, whatever it's written in. I think it was. So you have to be taught to learn to read. Then you can read the text. So it was limited amount of people that would be able to read and get the books. Then the printing press was invented. And then that like sparked innovation, because then in the matter of 10 years, like 10 million books were printed, and then we formed governments and organized and created inventions and corporations and all that kind of stuff. So printing press changed the game on that. Well, now we're moving to a world where for our whole life, right, it's just normal for us to think, oh yeah, banks and the government create money. By the way, most people don't even know how money is created. That's a whole conversation. But if you understand, you're like, oh yeah, banks and governments are the gatekeepers for money. Well, crypto came and was like, hey, like we don't need banks and governments for money. Like if you've ever settled a transaction on the blockchain, and you've like, if you and I talking right now, what is it? It's 6:59. Banks are closed. If you were like, hey Philip, send me $5, right? I mean, I can send you $5 via Cash App, but it's not settled. You know what I'm saying? Like if the money's not in my account and I send it to you and the bank gets it in 3 days, they're gonna reverse it out of your account. You know what I mean? Because it hasn't really settled. They're just giving you the money on credit overnight right now. But if I sent you, $5 of a stable coin, or $5 of Bitcoin, or $5 of even something I don't really like, Ethereum, whatever, it would settle, within 10 minutes or 20 minutes, or definitely an hour, and be in your account, final settlement, right? You can do it 7 o'clock on Monday night. You can do it on Saturday. There's no banks that need to be involved, right? And it's fast, right? And if you do it on a Lightning Network, which are layer 2s, that's a whole other conversation. I did an episode on that on my podcast too.
All right.
But you got to go to the actual podcast for that, not the YouTube channel. But that's like instant fast. Lightning Network for Bitcoin processes faster and more transactions than Visa Network, which is crazy. So that, I mean, it's money without the need of banks and governments, which in business, if you can speed the velocity of money, right, which we call velocity of money, or how fast money can move, that's like going back to the economy is dying, blood's acting up, right? Blood's dying. These crypto is saying, oh, wait, we're going to make the blood flow better, faster, better blood, fresh blood, young blood, right? So new money, better money, that's what these cryptos are doing.
Okay. And why does it have any value at all, crypto?
Well, yeah, it's a great question. The bigger question is, why does anything have value? Right. Scarcity and what I would call acceptability, or people want it. So I like to use the example of high school or college. We go to a dance, right? You show up at the dance, there's 30 women, 2 dudes. Who is more valuable in that equation? I mean, the dudes, right? But if 60 guys flood in, and now the ratio is warped, who's the most valuable, right? So you look at gold. Gold is the scarcest element on the element table. Out of all the elements that I felt this part of biology class, but out of all the elements, I don't know how many there are, gold is the scarces. That's
All
why
right.
gold has been a store of value for thousands of years. Gold has, country 90+% of countries' currencies have failed. Gold's been around, right? Because countries can print more money and create it, and they always 100% of the time print way too much more money and kill the money, right? Either kill it and it goes to zero, or they kill it as a store of value and it becomes, not worth that much money. So scarcity and then mass adoption. So increased supply, right? Low demand, increased supply is what creates value, right? And or just the supply and, just that supply and demand that we learn in economics, right? You need to have a situation where demand is growing faster than supply of money, and then you have number go up, right? If that reverses, the number goes down.
Okay.
And that's what, because I had a professional super smart was like, yeah, but Phillip, nothing backs Bitcoin. Oh, nothing backs the dollar. Gold backs the dollar. Gold hasn't backed the dollar since 1971. And they're like, for real? And I was like, yeah, no,
All right. So if I have a $20 bill in my wallet, like I know I can go into Chick-fil-A and order, I can get me I say I have $10, but I know I can get me a combo meal, maybe 2 combo meals. So I know it's gonna be $10. If I got $10 of Bitcoin in the morning, it may not that it'll swing this wildly, but there's some wild swings with Bitcoin. It may drop 10%, 5%, something like that. Why is it so volatile? And I guess why is it so volatile? Is kind of what I'm getting there.
Yeah, so this is a metaphysical answer. I'm gonna go deep so people can understand, because I love meditation, and this is gonna make sense. So meditation, religion, right? If you think of the word emotions, right? Energy, emotions are just energy. You know what I mean? Because we mirror atoms, we mirror the universe. Like all this shit is, I'm sorry, I don't know if I can curse, but all this stuff is the same. And so people who don't manage their emotions, right, are volatile, right? And would you say most humans don't manage change well?
Yeah.
And so you look at every new, like look at Amazon. Yeah, people were like, nobody's gonna buy anything on the internet.
Yeah, I was wondering.
Yeah. And so Amazon stock was volatile, like it's still volatile, and it's a few $1 trillion company, but it was very volatile in the beginning because changing. It was crushing malls, crushing companies, and it was still volatile because it was changed. Google the same way, Facebook the same way, McDonald's in when it was part of the Nifty 50, when it was in the 50s and 60s doing that, it was volatile. Walmart, when it was new, it was because right, we think Walmart's always been here. No, Walmart was built when we started building the suburbs after we came up with the gold standard in the 70s. You know what I mean? And had to build out these suburbs, and so Walmart got big. And so everything new is volatile because human beings don't process change well. And so you think of the market volatility, the way our emotions move whenever we lose a job, right? Or we get a new job, or we get a new girlfriend, boyfriend, spouse, we get a divorce, we have a new child. You know what I'm saying? Like we lose something. Like anything, whenever we have something that, and so our money that's in there, like which people value a lot, it becomes a reinforcing cycle because we already don't process change well. Then the money is doing this, and then it creates more emotions, and so and this is, side note, the biggest value of I tell my clients, you pay me not for building portfolios. I give away what you should buy on my podcast for free. Like, listen to my podcast. Like, I literally got a new client last week. She was like, I say, what made you call me? She's like, I've been listening to your podcast, and like, it's rare to see people give free information that's valuable, and you give free information that's valuable. And I was like, yeah, because I give away all of my best ideas on my podcast. Like, if you listen to my podcast and you're a do-it-yourself, and you would love it, because I literally tell you what to do. But people with money, they're like, I got money. I make money doing this. I don't want to do what you do, so I want to give you the money, because what they really pay me to do is to hold the frequency, meaning like, you're on this. So if I'm emotionally nervous, I know you know what you're doing. I need to call you because I know you're going to take 15 minutes and explain to me what's going on
Mm-hmm.
and manage my emotions and keep me from doing something crazy with my money so that I can realize the money I need to earn over time. I'm like a meditation guru for their money. You know what I'm saying? I'm like, just breathe. We're going to get through this.
Okay, cool. Thank you. And so I think at least I'll speak for myself. I feel like I'm speaking for a lot of folks. So when it comes to like the crypto space, there's the name brands. There's there's Bitcoin, then there's like if I could mispronounce it, like Ethereum, I think folks have heard of. But I feel like there's like 20, 30, there's like infinite amount of coins. So
Yeah, there's like thousands of them.
what cryptos are you comfortable with? Not that you're recommending it, giving any financial
Mm-hmm.
advice, but what cryptos are you confident in? And yeah, what cryptos are you confident in as far as all these coins?
So that's easy. I only own Bitcoin, right? And it tells you my confidence level. But I own Bitcoin, and it's the biggest asset class of my portfolio. But here's why. My investment philosophy is always once you see a big trend that has the opportunity, and the trend is clear, right? You see a big trend, the trend is clear. So in this example, we know crypto is here to stay. Because talk to anybody who's 30 or 40 and ask them, are they going to store their value in dollars? You know what I'm saying? Yeah. Like everybody who's 20 and 30 has some of their money in crypto or understands it, right? And then the people that are 40 that are relatively tech savvy have, increasing chunks of money in their Bitcoin. So or crypto. So it's here to stay. It's like commerce stocks in 99. It's here to stay. So okay, there's a trend. Then you find the winner, the clear winner, right?
Mm-hmm.
So I would apply this to like when everybody kept asking me, they still ask me, Phillip, what's the next Amazon? Amazon's the next Amazon. Yeah. Amazon's the next. It's growing at 40% a year. I mean, I've been getting asked this six years in a row. It keeps growing at 40% a year. Amazon's the next Amazon. Facebook, they got the best ad product out there. Like, what are you talking about? You're asking me this on Instagram. Google, right? So these are companies that are clear winners that you can buy and you don't got to guess, and you can, with a high degree of probability, beat the S&P 500 on those individual positions, right? And they've been clear winners for a while. So whenever I make a concentrated bet like that, I don't guess. You know what I'm saying? Mm-hmm. We talked about this before. I told people you had to guess in 2017 if you're investing in Bitcoin. If you bought Bitcoin in 2020, it was a clear winner. You know what I mean? And the trend was fully established. And when you get into crypto, right? And you look at the different types of applications for crypto, you have Bitcoin's in a league of its own. It's the only decentralized money. There's no CEO, there's no founder, that leads the crowd, right? There's no corporation. There's only going to be 21 million. There's been no major changes in the monetary system at all, from the beginning. So it has consistency. It's the largest. When you look at the big corporations that are putting it on their balance sheet in the countries, they're putting Bitcoin, not anything else. There's a reason for that. Like it's in a league of its own. So then you go to all the rest of them, Ethereum, Solana, Cardano. I mean, they all got founders who are still alive. It's all controlled by a small amount of people. It's basically the same system that we got today in digital format. By the way, they have their use cases and they're probably still going to be around, but as a store of value, right? I don't store my value in centralized cash because I've seen what it's done right now. I mean, I have enough cash to pay the bills, but I'm just saying, I've seen what they did to centralized systems. So I don't feel comfortable with that. And then you go to NFTs, and I love NFTs because they have scarcity. However, railroad principle, NFTs are what Bitcoin were in 2017 right now. So I'm just watching because there's no clear winner, you know what I mean? Right now in the NFT space. And so I'm watching Disney in the marketplace because Disney's an executor. Disney has for over 100 years built brand, right? So I'm betting they're going to be able to do this NFT thing, right? But I need the bubble to pop, right? I need Disney to for sure execute on the NFT. I need to, I need to find the Amazon, Facebook, Google, Bitcoin of NFTs, which there's going to be a lot of them because NFTs is all about investing in culture, and that could be a whole podcast episode. And again, I did a podcast episode on NFTs too on the podcast. I hope that answered your question. But Bitcoin's all I own right now, and that's the reason why. Because it has the right principles.
Oh, okay. Thank you. I think is there anything else I should be asking you about the crypto space? Anything? Obviously, I know you could you could talk for hours, but is there anything hey, maybe just one more nugget somebody should know? Or
yeah, I would say, man, I would say like whatever you do, just play it. Like play. Don't overthink it. You know what I mean? Like listen to what I'm saying, and do your research. But go buy something and then start learning. Right? Put the work in. Right? Just don't fall into the false beliefs where you think you can get a little for a lot. You know what I'm saying? Like you're not like when you're in there playing, I'm calling it like learning. So you're investing and then you're learning, right? You buy something and then you put 50 plus hours in of reading about it, right? The pros and the cons, and read it like 50 hours, like track it 50 hours, right? And I have a hard time believing that when somebody goes to 50 hours of doing something, they won't, they'll know whether it's a good deal or a bad deal. You know what I'm saying?
Okay, thank you. Appreciate your time, literally a wealth of knowledge there. Alex, I know you can talk about all those topics probably for the next couple of weeks or whatever, So cool. It was good catching up to you. I don't know if you guys know, I kind of met Phillip about 4-5 years ago, maybe.
Yeah.
So actually, I hadn't really spoke to him maybe like 2-3 years maybe. So this was a cool episode here. So I'm not sure I'm going to phrase this. My last question I always ask folks, I'll just ask you too the same question I ask everyone else. So if you had $1 million and you had to spend it on real estate or something real estate adjacent, and you had 1 week to spend it or you lose it, what would you spend that money on?
Yeah, I actually right now would give it to a buddy of mine who I think fixes the problems of suburbs at the moment right now. Specifically, you take a city like Cedar Hill or Duncanville or DeSoto, where they have a high income population that nobody knows about, but a lot of them work in downtown Dallas or downtown Fort Worth or somewhere else. So those cities get the restaurant revenue, tax revenue off that, and the shopping that they do when they're on their lunch break or whatever. So they get those dollars. At the same time, you have the increasing trend of remote work and the increasing trend of companies no longer doing like big leases downtown. Cause I got friends who work with big, I did the research on it. And so the whole, again, going back to my railroad principle, WeWork, the stock that went off a lot 4 years ago.
Yeah.
I pay attention. I didn't buy WeWork, but I was like, okay, this is the future. Like, this is the future. Let me pay attention, because what WeWork signaled was a lot of these companies are going to sign, and I've confirmed with my buddies in commercial real estate that work with Fortune 10 companies. They are, nobody's going back to remote work. And you're going to see a lot of these companies, going back to in-house work. And you're going to see a lot of these companies that say, oh, we're going to contract with these shared office space companies in Cedar Hill and DeSoto for our residents that live there. So give us 10,000 square feet, like in this area for them. Like, we'll lease it all up. It's cheaper because it's further out, and it's easier for us. And so now they can, live, work, and play where they are. And so my buddy, who's a young developer, had saw this, years ago, and built out these, shared office spaces, right? And so, and he's, he has a pedigree. So I'd give him the $1 million. I give him all of it.
Okay, cool. Appreciate it. You let the good folks know once again where to find your podcast, your YouTube, you in general, if they want to invest with you.
Yeah, man. So the best place you can get all that is go to stonehillwealthmanagement.com. It links out to all my information, my podcast link outs, background on me, stonehillwealthmanagement.com. All one word.
All right. And if you want to see some cool, I'm gonna mispronounce it.
Muay Thai.
Videos. Check out his IG. Ask Phillip, right? You can see him.
Ask Phillip. Yeah, you can see me. Get punched to punch folks. Working out.
All right, cool. So yeah, once again, appreciate your time. Thanks for coming on the podcast, the real estate show. And there's no outro to this show, so it is over. Thanks.
Appreciate you.